Cryptocurrency has evolved dramatically over the past decade, shifting from a niche digital asset to a mainstream financial instrument. With the increasing interest from institutional investors, the development of government reserves, and the growing push for regulatory clarity, the landscape of cryptocurrency is undergoing significant transformations. In today's video, we're diving deep into these critical factors and how they are reshaping the future of crypto. 1. Institutional investment in cryptocurrency. Institutional investment has been one of the most influential forces driving the mainstream adoption of cryptocurrency. A few years ago, cryptocurrencies like Bitcoin and Ethereum were largely viewed as speculative assets, with most retail investors being the primary drivers of the market. However, today, major institutional players, such as hedge funds, pension funds, and even large corporations are getting involved. The influx of institutional capital has been particularly evident with the rise of Bitcoin exchange-traded funds, ETFs, and the creation of crypto investment vehicles tailored for institutional investors. These developments have given traditional financial players access to the crypto market, while also bringing a sense of legitimacy to the space. Institutional investors tend to view cryptocurrency as a potential hedge against inflation, a store of value similar to gold, and a high-growth investment. The involvement of large institutions has provided increased liquidity and stability to the market, which is crucial for its long-term growth. Furthermore, as institutional investment continues to grow, we are likely to see greater price discovery and reduced volatility, making cryptocurrency a more attractive asset for both retail and institutional investors alike. 2. Government reserves and the rise of central bank digital currencies, CBDCs. As cryptocurrencies continue to gain popularity, governments around the world are exploring how to incorporate digital currencies into their financial systems. Central banks are looking at the potential of central bank digital currencies, CBDCs, as a way to modernize monetary policy, improve payment efficiency, and reduce the reliance on traditional banking systems. China, for example, has made significant strides with its digital yuan, and other countries such as the European Union and the United States are also exploring the potential of their own national digital currencies. For governments, CBDCs offer a way to retain control over currency issuance and transactions, while also capitalizing on the benefits of blockchain technology. In addition to CBDCs, we are seeing sovereign wealth funds and government reserves allocate portions of their assets to cryptocurrencies as a part of their diversification strategy. For instance, countries like El Salvador have made headlines by adopting Bitcoin as legal tender, and others are looking to follow suit. The push for regulatory clarity. The regulatory environment surrounding cryptocurrency has been a significant source of uncertainty for both investors and businesses. In the early years of cryptocurrency, the lack of clear regulations created a Wild West atmosphere with little oversight and a high degree of risk. However, as the industry has matured, the call for clearer regulations has become louder. Governments and regulatory bodies are working to establish frameworks that will provide clarity on issues such as taxation, anti-money laundering, AML practices, securities regulations, and consumer protection. Countries like the United States and the European Union are leading efforts to create regulations that can balance the need for innovation with the need for consumer safety and financial stability. As the regulatory environment evolves, it will be essential for businesses and investors in the crypto space to stay informed and compliant with the new rules. Clear regulations will help foster innovation while providing protection for investors, ultimately boosting the mainstream adoption of cryptocurrencies. Conclusion: the cryptocurrency landscape is rapidly evolving, driven by the growing involvement of institutional investors, the development of government reserves and CBDCs, and the ongoing push for regulatory clarity. These factors are laying the groundwork for a more stable, secure, and legitimate crypto market. As the industry continues to mature, it's essential for both investors and businesses to stay ahead of the curve and adapt to these changes. If you found this video helpful, don't forget to like, comment, and subscribe for more insights on the future of cryptocurrency.